Greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for the trading day of May 1st, 2025. This is later than usual. Long day at work and just getting home. It's after midnight. Interestingly, futures are up, yet Apple and Amazon are both down on their earnings. Maybe that's a good thing. Title this one will Rally Survive Monthly Employment Reports. Um, Big day on Friday. We are about 8 hours away from some very, very important information. Reach me at marketmripro@gmail.com or htsidoc@gmail.com. I respond to constructive comments, whether via email or in the remarks section. As always, these are for educational purposes only. Anything I say should be taken as education alone and not investment advice. The intent of the video is to demonstrate the tools of top-down analysis, how I apply them. Trading involves risk, and you alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock I mention in this report. Trading stocks and options should be considered risky and should consult with your financial advisor before making trades. And as you will see, if you come to my seminar, I have tools in multiple platforms, but I am a fully independent trader. I will be a seminar this Saturday morning at 11 a.m. It's no cost. I've been putting an invite in the Top Down Trader Google group for the last few days. I'll include it below in the remarks section as well. Topic will be Tools and Philosophy of Top-Down Trader. I'll break it into 3 parts. One will be the teachings of Ian Woodward and others that have impacted on my trading approach. The second part will be the official launch of Top-Down Trader. And the third part will be taking some trades and looking at how I approach options, which is probably different than most. I am a position trader, but I don't have to have stocks. I can be trading options, so I do a lot of stock replacement strategies. Another reason to attend is I'll be giving a $300 discount to attendees if they purchase my products. Other opportunity would be the Orange County meeting, Residence Inn and Suites, Tustin, Orange County. Went up to $400 today, still a bargain. 3 days of education and entertainment. Greg Mills at GAM72054 at AOL.com is the contact person. As you can see, we got John Person, Dan Fitzpatrick, Chris White, myself, Deb Kishoff, and potentially Matt Caruso. My Google group is where you can find out more about what we do and get discounts off my tools. Go to Google Groups, log in with your Google ID, look for Top Down Trader, separate words. Sign up, say how you want to be notified, and welcome to the team. I won't be soliciting you or sending your emails to other people or sharing your list. News and earnings. I think my buddy John Person used to call this the monthly unenjoyment report. I think it's going to be very interesting where the payrolls come in. And if we have a significant miss, will that tip us into recession thinking, and will the market follow lower? I think that's a big movement. Maybe we want it to come in a little hot. Earnings, I already talked about Amazon and Apple. Altizia and his team down big. And you can see we still got some earnings in the morning. As it says here, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. On to the charts. Start here with my daily performance view, and you could see on 1 day close, Q's led up 1.31, followed by the Spider at 0.7, Russell at 0.62, and Diamonds at 0.27. Really, to me, a disappointed day as the Q's and the Spiders were both up over 2%, Russell up over 1%. In fact, you could see here the range of how much these were up during the session. So here it is, the high percentage-wise. So disappointing that we closed so far off the highs. In fact, in the VIX, you could see it was down. But if you look at the top four, the ETFs for the indexes, the only one that didn't finish at the bottom of their daily range was the Russell. Here it looks at the NYSE and the NASDAQ, new high, new lows, new high, new lows, 4 different time frames. You could see the NYSE is maintaining positive here, yet we're mixed at best on the NASDAQ. Over here, we could see 1 day change, S&P 500 sectors. were led by technology, industrials, and discretionary and communications, so a risk on day. Laggards were healthcare, staples, materials, staples being a risk off sign when it's down there, or when it works, it's risk off. When it is weak, it's typically a risk on market. From a theme perspective, blockchain, oil production, internet, solar, e-commerce, uranium, infrastructure, aerospace, and software. Over here, you can see three indexes. The top bar here looks at today's sectors, 64% up versus yesterday. Industry groups, 52% up versus yesterday. Percent advances, 56%. Over on the NASDAQ, 53%. NYSE, 51%. So it's actually better than it was, but it's still kind of a 50-50 day. And I guess the indexes sort of reflect that. My buckets are something that I adapted from Ian Woodward to look at the amount of overbought, oversold, what the stocks look like. And we're shifting to the right, which means we're probably in an uptrend. More stocks above the midline of the Bollinger Bands than below, and that's a big improvement. But we don't have much building up at the top of the Bollinger Band, so not an oversold system or overbought at this point. Market breadth looks at the NYSE and the NASDAQ. You could see the NYSE failed at this 50-day moving average. That's not good. The NASDAQ broke above it, which is great, but it finished with a bearish looking candle closing at the low of the day. Not a real promising look if you're bullish. If we look down here, this was that breadth thrust stocks above the 20-day moving average. You could see above the 20, above the 50, and right above the 200 are increasing. And then just on the left is the NYSE, the right is the NASDAQ. You could see the new high, new lows up on the NYSE, down on the NASDAQ. AD lines and up-down volume, barely up on the NYSE, but up on both of them. If I look at the timing model, the dailies remain in a buy signal, which is great, but you had a doji on the Russell, but don't like the reversal candles on everything else. The buy-sell line is the bottom of the chart, and we'll talk at the at my seminar about how I make this and how you could be duplicating this on your own charts. And then on the weekly, you'll see is probably still in a sell, but I haven't looked yet, so let's take a look. And yep, the weeklies are still in a sell, so we're still retracing in a downtrend. As I've been saying the last couple of sessions, it doesn't mean you can't be buying here. You have to expect failure and be looking for it, but the markets could continue to go higher. And who knows, maybe it's a V-shaped recovery and we're going to new highs. So I've added a few things such as Palantir, which I mentioned when the market turned around. If we look at the U.S. indexes, you could see that we broke above the 50 on the spiders, on the Qs, still below the 50 on the diamonds. The Russell coming up to that 50, make sure we're on the dailies. The VIX still above where it was resting before, and the dollar started to move higher a little bit in the market on Thursday. If we look at the commodities, we'll see that gold continues to come down, as does silver after setting all-time highs, or certainly recent highs. I think it's all-time. Oil trying to stabilize down here after a sell-off. Natural gas bouncing again off the 200. And the 10-year and the 30-year were both up in the markets on Thursday. When I look at sectors, I'm trying to see what's working, I like to go to the ratio charts where each of these is a S&P sector ratio chart versus the spider. This is Bitcoin versus the spider. You can see the strength of Bitcoin compared to the S&P. And a quick look shows strength continuing to emerge in technology. Discretionary lagging a little bit, but still heading up, as is financials. Industrials looks good. And what looks weak are the defensive staples, utilities, real estate, and healthcare. Now, so I've now come to the opinion, as I've shown you, that the markets are in a retracement and a downtrend. I said it's okay to look at long and be careful. I think we're getting very close to a decision point, and as I had built out my thoughts on the market, I was looking at, and I'll just blow up the spider and we'll talk specifically about the spider. There have been a lot of areas, the 17-day, the trend line, the 50-day. So each one, notice we've stuttered a little bit before we got over. And now we've got to get over the 200. I will become increasingly bullish if we're able to get there. This is not a bullish candle. It's a failed candle. So I will be watching closely for evidence of a breakdown. But right now, the trend is your friend and the trend is still going higher. Whoops, sorry about that. Kill that. If we go to the JAS layout, this is where we do the slicing and dicing of the stocks. I'll show you a couple things that I like to do. I go to the top down and it shows me, well, we back up a second. I use a list. Here it's got 3,500 stocks. This is everything in the NASDAQ, the AMEX, and the NYSE. It's filtered for $1 and 100,000 shares. No, I don't buy stocks that are that cheap, but I want to have a robust list. And then we've assigned each one to an industry and sector. So you can look here. Here's the sectors and industry groups. We can look at what was working in the market. And you can see that despite my comments about tech, if you look at percentage-wise and you don't look at just the 500 stocks, you look at that 3,500, industrials are leading. Let's look at the first 4, 3, and 4. You can see there's 1,262 stocks. Now let's look at the top industry groups in those 4. And this is probably engineering, oil and gas, 3, 4, 5, 6, 7, 8, 9, 10. I've got now 175 charts to look at, and now let's go in here and let's filter them price greater than 5 and volume greater than 500, and this gives me a list that I might want to take a look at. So I'm going to rank this by 2-day momentum, which is the FM2, and I'm going to just go start looking at these very quickly. The first one, for whatever reason with our data provider, I think you got to wake it up. It takes a little bit longer. MYRG, that's a nice breakout. Look at the volume. Gap, volume, breakout, momentum, great relative strength at OBV. I don't know anything about what they do, but I love what they did in the chart. So I might add this one to one of my lists that I might go back and look at later. So let's just continue down. Don't know OSI Systems, technology play, big gap, breakout, volume, momentum, relative strength, OBV. But the challenge here is if you look up at the top, you see it's at 99% on the high jump, something else I'll teach you about this week on Saturday, and that to me is a sign of being extended. On the MYRG, it's also extended, which would be something to be concerned about. PWR, Quanta Services, also extended. So this is interesting. It's been so long since we've seen so much extension. John Deere looks good. Now I'm going to go in here and check when its earnings dates are. Next earnings is it's right in front of my face because I know it's in here, is May 15th. So that's something to be aware of. But from a charting perspective, uptrend, pullback, and a breakout above the 50, volume, breakout momentum, relative strength, and OBV look good. Not extended. John Deere looks good. So I will typically start to go down a list of stocks. CEG, one of these energy plays that services data centers. This VST, similar story. Talon Energy. So I could go down this list, but we'll stop here. This will be my favorite. Sterling Infrastructure, which has broken out of this flag. Relative strength and OBV are good. Not extended, so I like STRL. So to me, this is how I like to find stocks from a top-down perspective. Now, you could argue and say, but how do I know that all the best industries are in those first 4 groups? So I could actually only look at industries and take the ones in the top 10 as well, not filtering by sectors. That's one approach. That's the top-down approach. That's my favorite approach. Another approach is to do bottoms up. And so I might take a list of stocks and then I have a scan called the 2-day momentum up. This has been my go-to scan. And let's see if anything made the cut. And the only thing is Travagio. I have no idea what they do. I think it's an internet site communication. But look at this. Let's see, was this an earnings day? 429. So earnings were 2 days ago. Um, doesn't make money consistently, but had a big change and a big surprise. Revenue was up. That's an interesting one too, and I might go here and look at the news and see if there's anything there. And what I really like is I can click on that link and it will actually bring up the story that you're referring to here as the earnings transcripts. So that's pretty cool. So I like this one. Another scan that I like, and I'm already filtering for the 5 and 500 already, is this multi-time frame CPR signal, which I'll explain over on the session that we'll be doing soon. And I think I killed the wrong thing here, so let me just do this. Start all over, go here, and let's go to EMS cross up, multi-time frame, no EMS, multi-time frame, $5 and 500. Hit OK. And then I could do the same thing, rank them by 2-day momentum, and see what we find. OLED. Remember that first one, for whatever reason, takes a little bit longer. Waking up the server. Wake up, wake up. Okay, so this is one that's been flailing and falling, but something happened, must have been earnings. Earnings, so you had a surprise on earnings, surprise on revenue, 13% increase. That's an interesting story. So this is one. So it's in a short-term uptrend. Tons of volume. Had the CPR signal, relative strength OBV, not extended. Only thing I don't like is it's below the 200. And I can just keep going down and looking at various stocks in my list. So that's some of the ways I like to look at the market. Hope you got some value out of this. Hope to see you at my seminar on Saturday at 11 Eastern. You got to register. Take care, everybody.